Welcome to another financial analysis lecture. For this lecture, we are going to discuss the vertical analysis as the second technique of financial statement analysis techniques. Vertical analysis is concerned with showing and describing how, for example, the fixed assets are composed of, what are the components of the current assets, the relative weight of each component, the relative weight of cash to the total current assets, the relative weight of land to the total fixed assets, and so on. This means that in vertical analysis, each element of the financial statements, like the income statement and balance sheet, are shown as a percentage of another item. For example, the cash will be shown as a percentage from the total assets. The accounts payable will be shown as a percentage from the total liabilities and owner's equity. So the total assets and the total liabilities and owner's equity will represent the 100% of each side of the balance sheet, and each item and each component of the balance sheet will be divided by this total or this 100% to get its percentage. In the case of income statement, each element of the income statement will be divided by or will be represented as a percentage from the total sales. As an example for how to make a vertical analysis for the balance sheet, we have this example. You have given the balance sheet for 2018 and 2017. Here we have the assets, here we have the liabilities and the owner's equity and the total liabilities and owner's equity. And you are required to make a vertical analysis for 2018 and 2017. Let's see how we're gonna make a vertical analysis. To solve the example, you are going to make a column for 2018's percentage and 2017's percentage. To get the vertical analysis for any balance sheet, you're gonna just divide every item from the given balance sheet by either the total assets or the total liabilities and owner's equity for the same year. This means that we are going to divide the current assets 130,000 by 199,000 equals 65.3%. You're gonna divide 69,000 by 199,000, multiply by 100 to get 34.7%. 50,000 divided by 199,000 and multiply by 100% to get 25.1. So this means that the total assets and the total liability and equity, which is, by the way, should be equal within any balance sheet, is the 100%. This is the whole. This is 100%. And all the other figures is divided by this whole or this 100% to get its percentage. And the same goes to 2017. Each figure from 2017 will be divided by either the total assets or the total liabilities and owner's equity to get its percentage. Okay. We can comment on these figures and say that in 2018, 65.3 of the assets are current assets. This means that the company doesn't suffer from liquidity issue because the current assets are more than the fixed assets. So the liquidity levels are okay. Also, 42.7% of the liabilities are long-term liabilities. So the company depend more on the long-term liabilities rather than the short-term liabilities. And the total equity represents only 32.2 versus 67.8 liabilities. This means that the equity is less than the liabilities. So the company depend more on external finance rather than the internal and owned finance. And of course, depending on long-term liabilities to finance the operations has a high cost. We can also compare between the results of 2017 and 2018. For example, the current assets decreased from 66.7 in 2017 to become 65.3 in 2018, and so on. So how about doing a vertical analysis for an income statement? Here we have the income statement for 2018 and 2017, and you are required to prepare the vertical analysis for both years like we have done with the balance sheet. Let's see how to make it. We are going to follow the same steps like we did with the balance sheet. We're going to add two more columns, one for 2018 and one for 2017, to get the percentage of each item of each year. But here we are going to divide each item by the net sale. This is 100%, or this is the whole that I am going to divide by every single item within the income statement for each year. So to get the percentage of the sales, we're gonna divide 158,000 by 150,000 and place the amount here. We're gonna divide 8,000 sales return by 150,000 net sales and place the amount here. We're gonna divide the net sales by itself to get 100. 96,600 cost of goods sold divide by 150,000 to get 64%. 54,000 gross profit divided by 150,000 net sales multiply by 100 to get 36%, and so on until you finish 2018. And the same goes for 2017. You're going to divide each single figure here by 90,000, which is the net sale. So for income statement, you're going to divide every item by either net sales or the sales if you don't have sales return. Okay. How do we comment on vertical analysis for the income statement? Remember example 2, there was a substantial increase in sales. The horizontal analysis said that sales increased, but there was a greater increase in cost of goods sold. This also appears here in the vertical analysis. We can see that the cost of goods sold portion or percentage is very high. It represents like 65% of the total sales. Okay, so this is clearly borne out of the above vertical analysis. A serious problem is indicated for Rayfield company. This is considered as a serious problem because the cost of goods sold is very huge, and the management need to make further investigation to know about this increase. It might be because of an increased purchase in purchase price, and this increase didn't yet reflect in the sales. Or maybe there is a manufacturing problems, or the labor may need some training, and many other reasons.